What if the numbers you are seeing right now are not just hype, but a signal of something much bigger building behind the scenes? Because when people hear a figure like 52,000%, the first reaction is disbelief, the second is curiosity, and the third is fear of missing out. And that is exactly where attention starts shifting because massive percentage gains in the crypto market are never random. They come from a mix of timing, adoption, liquidity, and most importantly, belief shifting from doubt to confidence. And right now, there is a growing conversation around XRP that is starting to look very different from what we saw in the past few years. And the question is not whether such a move sounds crazy. The real question is what conditions would need to exist for something like this to even be possible, and whether those conditions are slowly forming right now without most people noticing. When we talk about a number like 52,000%, it is important to understand what it actually means in simple terms because many people hear big percentages but do not translate them into real price movement. And that creates confusion. So let's simplify it clearly. If an asset increases by 52,000%, that means it multiplies its value many times over, turning small holdings into something much larger. And this is exactly why early investors in crypto markets have historically seen life changing returns. But at the same time, these types of moves never happen overnight. They build through phases, starting from accumulation, then moving into awareness, followed by expansion, and finally reaching a peak driven by mass attention. Right now, XRP is sitting in a very interesting position in the market because, unlike many other cryptocurrencies that rely purely on hype cycles, XRP has always been tied to a real world use case, and that is cross border payments, which is a massive global industry worth trillions of dollars. And this is where things begin to get serious because when an asset is connected to real financial infrastructure, its potential growth is not just based on speculation, but also on actual usage. And this creates a completely different type of momentum compared to meme coins or short term trends. Another important factor that needs to be understood is market psychology because big moves like 52,000% are not driven only by fundamentals. They are also driven by how people feel about the market. And right now, sentiment around XRP is slowly shifting because for a long time, uncertainty held it back, especially due to regulatory pressure, and that created hesitation among investors. But as clarity improves and confidence starts returning, the same asset that was once ignored can suddenly become the center of attention. And when that shift happens, it often happens faster than people expect. At the same time, it is important to stay realistic because not every prediction or headline turns into reality. And the crypto market is known for exaggeration. So instead of focusing only on the number itself, it is smarter to focus on the direction of change because even a fraction of such a move would still represent a significant gain. And this is where smart investors separate themselves from emotional decisions. They do not chase extreme numbers blindly. They look at the underlying trends and position themselves based on logic, not hype. There is also the factor of timing because in crypto, timing is everything. And many people enter the market too late after the biggest moves have already happened. And then they blame the market instead of understanding their own entry strategy. And this is why discussions like this matter, not to promise unrealistic gains, but to prepare for possibilities. Because when you understand what could happen, you are better prepared to act when the opportunity actually appears. What makes the current situation even more interesting is the growing attention from institutions because large financial players are slowly stepping into the crypto space. And when institutional money enters, it brings not only liquidity, but also legitimacy. And XRP has always been positioned closer to the financial system compared to many other cryptocurrencies. And if that connection strengthens, it could act as a powerful driver for long term growth. At the end of the day, the idea of XRP reaching something that reflects a 52,000% increase is not something that should be accepted blindly, but it should not be ignored either, because markets have a history of surprising people. And what seems impossible today can become reality under the right conditions. And this is why staying informed, staying patient, and staying logical is more important than reacting emotionally to headlines, because the real opportunity is not in chasing hype, but in understanding where the market is heading before the crowd fully realizes it. When trying to understand whether a massive move like 52,000% is even possible, the first thing that needs to be broken down clearly is the idea of market cycles, because the crypto market does not move in a straight line. It moves in waves, and these waves are driven by patterns that repeat over time, even though the reasons behind them may change. And if you look closely at past cycles, you will notice that every major asset that delivered huge returns started from a long period of silence where almost no one was paying attention. And this is exactly the phase where smart money quietly positions itself before the market wakes up. Right now, XRP is showing signs that are often associated with early stages of a potential cycle shift, because for a long time it remained under pressure while other cryptocurrencies were moving ahead. And this created a gap between perception and potential. And in markets, gaps like this do not stay forever, they eventually close. And when they do, the move can be very sharp, because people who ignored the asset suddenly rush in at the same time, creating a strong push in price. Another important aspect to consider is supply and demand, because no matter how strong a narrative is, price movement always depends on how much of an asset is available and how much people want it. And XRP has a fixed supply structure, which means that as demand increases, the available supply becomes more valuable, especially when large portions of it are held by long term holders who are not actively selling. And this creates a situation where even a small increase in demand can lead to a noticeable price movement. And if demand increases significantly, the impact becomes much larger. At the same time, liquidity plays a very important role, because in order for price to move up consistently, there needs to be enough buying pressure entering the market. And this is where institutional interest becomes a key factor, because retail investors alone can create momentum, but institutional investors can sustain it. And XRP has always been part of conversations related to banking systems, cross border settlements, and financial efficiency. And if even a small portion of that system starts integrating with XRP in a meaningful way, the increase in liquidity could change the entire price structure over time. There is also a technical side to this discussion, which many people ignore, and that is how price behaves around key levels, because markets tend to respect certain zones where buying or selling pressure becomes stronger. And when an asset breaks out of a long standing resistance level, it often enters a phase where momentum builds quickly. And this is because traders who were waiting for confirmation start entering the market at the same time. And this creates a chain reaction that pushes the price further. At the same time, it is important to understand that big percentage gains often come from low starting points, which means that the earlier someone enters during a quiet phase, the higher the potential return. But this also comes with higher uncertainty, because at that stage, the market has not yet confirmed the direction. And this is where risk management becomes important, because no matter how strong a setup looks, there is always a possibility that the market moves in the opposite direction. Another factor that cannot be ignored is media influence, because in today's digital world, attention spreads faster than ever. And once a narrative starts gaining traction, it can attract millions of people within a very short time. And this is exactly what creates explosive moves, because as more people hear about a potential opportunity, more people enter the market. And this creates a cycle where rising prices attract more buyers, and more buyers push prices even higher. However, This is also where caution is needed because the same mechanism that drives prices up can also drive them down when sentiment changes. And this is why understanding the difference between early stage accumulation and late stage hype is critical, because entering the market too late can turn a potential opportunity into a loss. And this is something that many new investors experience when they follow trends without understanding timing. What makes XRP different in this situation is that it is not starting from zero awareness. It already has a strong community, a long history, and a clear use case, which means that if momentum builds again, it does not need to create a narrative from scratch. It only needs to reignite the existing one. And this can happen faster than expected because the foundation is already there. In simple terms, the idea of a 52,000% move is not about predicting an exact number. It is about understanding the conditions that allow such moves to happen. And those conditions include strong demand, limited supply pressure, increasing liquidity, positive sentiment, and a clear narrative that attracts attention. And when these elements start aligning, the market can move in ways that seem impossible at first but makes sense when you look at the bigger picture. To go deeper into this discussion, it is important to understand the role of real world adoption, because this is where XRP separates itself from many other digital assets. And this is also where the idea of extreme growth starts to become more logical instead of just emotional speculation. Because when an asset is actually used in financial systems, its value is not only driven by trading activity, but also by utility. And utility creates consistent demand, which is one of the strongest drivers of long term price movement. XRP was designed to solve a very specific problem, which is the inefficiency in cross border payments. And this is not a small issue because transferring money across countries today is still slow, expensive, and often complicated. And financial institutions are constantly looking for ways to improve this process. And if a solution proves to be faster, cheaper, and more reliable, it naturally attracts attention. And this is where XRP has positioned itself for years, building partnerships and infrastructure around this idea. Now, when you connect this to the possibility of large price movements, the logic becomes clearer. Because if adoption increases, demand increases. And when demand increases in a system with controlled supply, price responds. But what makes this even more powerful is the scale of the financial industry, because we are not talking about millions, we are talking about trillions of dollars moving globally. And even a small percentage of that flow interacting with XRP could create a significant impact on its valuation. Another layer to this is regulatory clarity, because one of the biggest barriers that held XRP back for a long time was uncertainty. And markets do not perform well under uncertainty, especially when it comes to legal and regulatory issues, because investors and institutions prefer environments where rules are clear and risks are defined. And as clarity improves, confidence returns. And when confidence returns, capital follows. And this is exactly the type of shift that can change the trajectory of an asset. It is also important to look at how technology adoption works in general, because most people expect immediate results, but real adoption happens gradually and then suddenly. And this pattern has been seen in many industries where a technology grows quietly in the background and then reaches a point where it becomes widely accepted. And at that point, growth accelerates very quickly. And this is often the stage where price movements become aggressive because the market starts pricing in future potential all at once. At the same time, there is a strong psychological element that comes into play, because once people start believing that something big is happening, they begin to act on that belief. And this creates momentum that feeds on itself, because rising prices attract attention. Attention attracts more buyers, and more buyers push prices even higher. And this cycle continues until the market reaches a level where it becomes unsustainable. But before that happens, the growth phase can be extremely powerful. Another important factor to consider is the role of long term holders. Because in assets like XRP, a large portion of the supply is often held by people who have strong conviction and are not easily influenced by short term price movements. And this reduces selling pressure during early stages of growth, allowing the price to move more freely when demand increases. And this is one of the reasons why some assets experience rapid upward movements once momentum begins. However, it is also necessary to stay grounded because while the potential for large gains exists, it does not guarantee that every prediction will come true, and the market is influenced by many variables, including global economic conditions, investor behavior, and unexpected events. And this is why relying only on one outcome is risky because flexibility and awareness are key to navigating such markets. What makes the current situation unique is the combination of factors that are slowly aligning, including improving sentiment, increasing attention, potential adoption, and a growing belief that XRP could play a larger role in the financial system. And while this does not confirm a specific percentage increase, it does create an environment where strong growth becomes more realistic than it was in the past. In simple terms, the discussion is not really about whether XRP will reach an exact number like 52,000%, but about whether the foundation exists for a major shift in value. And when you look at adoption potential, market structure, and investor psychology together, it becomes clear that while the path may not be straight, the possibility of significant movement is something that cannot be ignored if the right conditions continue to develop. Now, when looking at a scenario where XRP could move in a very aggressive way, it becomes important to focus on timing and positioning because in every market cycle, the biggest gains are not made by the majority of people. They are made by those who understand when to enter, when to stay patient, and when to avoid emotional decisions. And this is where many investors struggle because instead of following a clear strategy, they react to price movements. And by the time they enter, most of the move has already happened. One of the key patterns that can be observed in crypto markets is that strong assets often go through long periods of sideways movement before a major breakout happens. And during this phase, the price may look boring, it may feel like nothing is happening. And this is exactly why many people lose interest and move on to other opportunities. But what they do not realize is that this quiet phase is often where accumulation takes place, and accumulation is the foundation of every big move because it represents a transfer of assets from weak hands to strong hands. When XRP stays within a certain range for a long time, it creates a base, and the stronger the base, the stronger the potential breakout. Because once the price finally moves above that range, it signals that demand has overcome supply, and this is where momentum begins to build. And once momentum starts, it tends to attract more participants into the market, creating a chain reaction that pushes the price higher. Another important element is patience because the idea of a 52,000% move can create unrealistic expectations in the short term. And this is where many people make mistakes because they expect immediate results. And when the market does not move quickly, they lose confidence and exit their positions only to see the price rise later without them. And this cycle repeats again and again for many investors who do not understand how long term growth actually works. At the same time, risk management becomes extremely important because while the potential for high returns exists, the market is still unpredictable and no outcome is guaranteed. And this is why experienced investors never put all their capital into a single idea. They spread their risk, they stay prepared for different scenarios, and they focus on protecting their capital first before chasing gains because surviving in the market is more important than trying to win big in a single move. There is also the influence of global financial conditions because crypto markets do not exist in isolation. They are affected by interest rates, liquidity in the broader economy, and investor confidence across all asset classes. And when liquidity is high and confidence is strong, risk assets like cryptocurrencies tend to perform better. And this creates a supportive environment for growth. But when conditions tighten, the market can slow down or even reverse. And this is why understanding the bigger picture is important. Another factor that plays a major role is narrative strength, because in modern markets, stories drive attention, and attention drives capital. And XRP already has a strong narrative around being a bridge between traditional finance and digital assets. And if this narrative gains momentum again, especially with positive developments or increased adoption, it can act as a powerful catalyst that brings new interest into the market. At the same time, it is important to recognize that not every phase of growth is smooth, because even during strong upward trends, the market experiences pullbacks, corrections, and periods of uncertainty. And these movements can shake out weak hands, creating fear and doubt. But for those who understand the bigger trend, these moments are often seen as part of the process rather than a reason to panic. And this difference in mindset is what separates confident investors from emotional ones. Another thing to keep in mind is that extreme percentage gains usually happen in stages, not in a single move. And this means that the market will go through multiple phases of growth and consolidation. And each phase will test patience and discipline. And those who stay consistent with their strategy are more likely to benefit from the overall trend, while those who constantly change their approach based on short term movements often miss the bigger opportunity. In simple terms, the possibility of XRP achieving a massive move is not just about the asset itself, it is about how investors behave around it, because markets are driven by human decisions, and understanding those decisions is just as important as understanding the technology or the fundamentals. And when you combine patience, timing, risk management, and awareness of market conditions, you create a stronger position to benefit from potential opportunities instead of reacting to them after they have already passed. As everything comes together, the most important thing to understand is that discussions around extreme numbers like 52,000% are not really about predicting an exact outcome, but about exploring the full range of possibilities that can exist in a fast moving and evolving market like crypto. Because history has already shown that what seems impossible at one point can slowly become realistic as conditions change. And this is why staying informed and thinking long term becomes far more valuable than reacting to short term noise. When looking at XRP from a complete perspective, it becomes clear that there are multiple layers influencing its potential, including adoption, market cycles, investor sentiment, liquidity, and global financial conditions. And none of these factors work in isolation. They all connect with each other. And when they start aligning in the same direction, the impact can be very powerful. But at the same time, if even one of these factors weakens, it can slow down momentum. And this is why balance in thinking is important, because it allows you to stay realistic while still being open to opportunity. Another key point that should not be ignored is personal strategy, because no matter how strong an asset looks, success in the market always depends on how an individual approaches it. And this includes understanding entry points, setting realistic expectations, managing risk, and most importantly, staying disciplined. Because without discipline, even the best opportunities can turn into losses. And this is something that many people learn the hard way when they let emotions take control of their decisions. It is also important to understand that markets reward patience more than excitement, because the biggest gains often come to those who are willing to wait through uncertainty, who do not panic during slow periods, and who do not chase every trend that appears in the market. And this is especially true in crypto, where volatility can create both opportunities and risks at the same time. And learning how to stay calm in both situations is what builds long term success. At the same time, expectations need to be managed carefully because focusing too much on extreme outcomes can create pressure and lead to poor decisions. And instead of aiming for a specific number, it is often more effective to focus on the process because when the process is strong, the results tend to follow naturally. And this mindset helps reduce stress and improves consistency in decision making. Another important factor is continuous learning because the market is always changing, new developments happen, new trends emerge, and staying updated allows you to adapt instead of being left behind. And this is especially important in a space like crypto, where innovation moves quickly and information spreads even faster. And those who stay informed are always in a better position to identify opportunities early. In simple terms, the idea of XRP reaching something that reflects a 52,000% move should be seen as a possibility that depends on multiple conditions coming together over time, not as a guaranteed outcome. And by understanding the bigger picture, staying patient, and focusing on strategy, it becomes easier to navigate the market with confidence instead of confusion. This content is created for informational purposes only and should not be taken as financial advice because the crypto market involves risk and prices can move in any direction at any time. And before making any investment decision, it is important to do your own research, understand your financial situation, and consider the level of risk you are comfortable with, and never invest money that you cannot afford to lose because protecting your capital should always be the first priority. If you found this breakdown useful and want to stay updated with clear and simple insights like this, make sure to stay connected for more content because understanding the market step by step can make a big difference over time. And being early with the right knowledge is always more powerful than being late with strong emotions.